It's Greg Michaelowski with the Midday Forex commentary for FX Street. During this commentary, we'll take a look at some of the major currency pairs, take a look from a technical basis. What we do like to look at is things like moving averages, trend lines, Fibonacci retracement levels. And we'll start off by taking a look at the dollar Swiss. The market in the dollar Swiss just broke temporarily, it looks like, through the 38.2% retracement of the move up from the Friday low. That low came in at the 105.56 level at this point right here near the opening of the Friday low and extended all the way to the highs that we saw here today. Notice that here at the highs, we did have a number of different bars on the 5-minute chart where the market did test that highs and could not get through that 106.89 level. And that started to move back to the downside. The downside took it through the 100 bar moving average of this 5-minute chart. It paused at the trend line here. This trend line extended for a number of different points along the chart, went through the 200 bar moving average, and you can see here that the market is using this 200 bar moving average as resistance. Now the market came off of the support at the 38.2% retracement up to the 200 bar moving average, back down to the 38.2, back up, and is now looking to be pressured further to the downside for this currency pair. It looks like the market may want to take a look at the 106.23 level. That would be the 50% retracement of that move up from Friday's low, and further below that level would be another target of 106.07, which is more or less where the closing level from Friday came in. That would be another level that the market could target for the dollar Swiss if the trend continues for this currency pair. Let's take a look at the euro versus US dollar. So the major currency pair, obviously affected by things like Greece, things like the situation, the airline situation, which seems to be clearing up at the moment. That may be giving this pair a little bit of a boost. Also, Goldman, sort of fighting back, has given the stock market a little bit more of a boost, and that has also helped reverse some of the trends that we saw in the euro versus the US dollar earlier today, or the dollar in general. And you can see here that the market had this channel here. This channel was off of, if you take a look at really, it was really developed more off the lows. We had one, two, three, 4, 5, 6 different times here where the market tested this bottom trend line here, put a parallel trend line up there. The market came up to test that level earlier in the New York session, broke through that, and if I zoom in here, you can see more closely how the market really tested that level, tested the 200 bar moving average. It's green line in this chart on a couple different occasions here, but each of the time the market has been able to rebound. What is of significance, however, is that we are being contained on the top side as well. 134.73 seems to be a ceiling level for the currency pair. You can see that also corresponds with some highs here that we saw here earlier in the day, and some lows. So what I would suggest is put a little line across that top there. This level is going to be a level that the market needs going to have to get through, and currently trading at 70. We're not that far away from it. Where can we go on the upside if the market does break that level? And there are two levels that have of interest. One is the midpoint of this move up. This is the April low. This is the April high. The midpoint of the month of April range is 134.87. That certainly would be a target on the upside. The other level that I want to look at is off the 5-minute chart, and that is the 38.2% retracement of the move down from the Friday high to today's low. That 38.2% retracement comes in at 134.81. So really, this 81 to 87 level is my target level on the top side for the euro versus US dollar. Look for support down here against the 200 bar moving average and this old trend line, which currently comes in at 134.55 as we enter into the New York afternoon. Let's take a look at the sterling versus US dollar. This currency pair is, despite the fact that it has this gap here. This gap goes from the high today of 153.20 up to 153.65. That was Friday's low. Do have that gap to fill here, but today we do have another one of these V formations, at least in the trading range for today. The market was sold off and quickly rebounded. We saw a V formation on Friday when market sold off, came back on, and when actually went down again. We had a V formation here. We had the V formation here. It's becoming a pattern here in the sterling versus US dollar, where you have a directional move in London session followed by a directional move in the opposite direction in the New York session. So and sometimes you even get down, up, and down like we did on Friday for that currency pair. So today we are seeing the full move to the upside. The problem is that we did stall here at the highs for the day at 153.19. Market currently trading at 152.83, so well off the highs, and we have this gap to fill, which we did not get close to filling as well. Let's take a look at the 5-minute chart, see if there's any clues off of this. And what we can see here is that there is resistance against the highs from earlier in the day. I didn't mean to do that. I wanted to put in more of a color line there to show you that there is a resistance up there at the highs. If you take the 38.2% retracement, this move down from Friday, 152.98, we are also below that level. I expect to see some support, however, is against this 152.55 level. That's the 200 bar moving average on this 5-minute chart, and the 100 bar moving average on the 5-minute chart is also moving up toward that 55 level. That 100 bar moving average currently comes in at the 152.46 level. So this is at 55, this is at 46. This is moving up toward the green line. If the market should come down, continue its a corrective move to the downside, we might expect that these two moving averages start to converge and the market finds support against those moving averages, in which case the market then has to decide, does it want to go continue its trend to the downside, continue its worries about the UK political situation, which is getting quite testy with three-party system over there, or are we going to bounce off of that level and correct further, go fill that gap? It's up to the market. The market decides, but we do follow follow the clues that the market gives, and that would be against this moving average or against a move to up through the 153.14 level. Finally, let's take a look at the dollar yen. That's the other major currency pair that we like to look at. And if you look at that on the daily chart, what is key here is this green line and this 50% retracement level. Again, I didn't mean to do that. I meant to do a colored line here. These two, I did it again. These uh, two support levels down here. The green line represents a 200-day moving average, and the 50% retracement is the retracement of the move. Well, really the 2010 low to high range. Midpoint comes in at 91.45, and this 200-day moving average comes in at 91.37 here today. So they're within 8 pips of each other. The market got down to, I think, a low of 53 here for the day and bounced off of that level. Currently trading well above that at 97.22, but it's a level to pay attention to down the road for the dollar versus yen. If we see further weakness in the dollar versus yen going forward as a result of flight to quality into the yen for all sorts of situations. It could be Greece, it could be airlines, it could be Goldman Sachs, it could be anything that would cause the dollar yen to be more supported, but that support should find good or that the yen be further bid up, and that would cause the dollar yen to go down. But that support should find good buyers at the 45 to 37 level on the downside. Let's take a look at the hourly chart. We're back within this wedge here that was forming here. You can see here that the market used this trend line on the downside. We broke through it here, and then we started to use it as resistance on the top side. We've since broken back above that level, which is positive for the currency pair. So we were looking for support against this trend line right now. That trend line currently comes in at the 92.11 level, and the current price trade at 92.23. As long as price can remain above the 92.11 level, we could see higher prices in this currency pair. We'll go up to the 92.47, which is this line tested 1, 2, 3 over 5. To moved above it, moved a little bit below it here on volatility, came down, tested, moved below it here, came back up, tested the 100 bar moving average before moving below it. So it had couple little blips along the line here, but you can see this whole line is providing either support or resistance back in the trend. The resistance comes in against the blue line. That's a 100-hour moving average, comes in at 92.84. Look at the 5-minute chart in this currency pair. It's showing bullish bias here, back above the 100 and 200 bar moving average. Those two moving averages converging at 91.99. That also be a support level on the downside for the dollar yen. This is my midday report for specifically for FX Street. If you have any questions, you send me an email at greg@fxdd.com. Thank you very much for tuning in. Thank you.